Good morning and welcome to the Coffee and Cap Rates podcast, your go-to source for New York City's latest commercial real estate insights. This program is brought to you by Ariel Property Advisors.
Hi, everyone. It's Shimon Shkury here with Coffee and Cap Rates, the podcast that you love of Ariel Property Advisors. And today I have my colleagues here with me, Jason Gold, our Senior Director in the Bronx, as well as Daniel Mahfar, our Director in the Bronx as well. Jason and Daniel, thanks for being here.
Thank you for having
Thank
us.
you for having us.
Awesome. We're going to get going and look at our report, and we know that there has been growth in transaction volume. In fact, more than $1 billion, close to $1.1 billion in total transaction volume. And the two property types I want to talk about and touch on are the multifamily asset class and development. And I want to start specifically with the multifamily asset class, which we've seen, interestingly enough, two types of submarkets or subsections of that trading a lot in the Bronx. One was the rent stabilized asset, and the second was affordable housing. And I wanted Daniel to give us a little bit of an overview of what we're seeing there and what we're transacting there as well. Daniel?
Sure. So I think the topic with multifamily right now is that dollar volume and transaction volume is up significantly year over year. Dollar volume has doubled, transaction volume up almost 50%. This is due to a lot of investors taking advantage of the low basis and higher cash flow opportunities in the Bronx, with rent stabilized assets trading at record lows from even 7 years ago. We do expect at the current trend that price per unit will break 100,000 on the bottom end. For the first time in almost 7 years, we are seeing a lot of buildings start to trade below that number. With that said, there have been some larger trades from some contrarian investors who are bullish on NYC, including a 36 building, 2,000 unit portfolio that PH Realty bought for $190 million. That was a discount from the 2014 price that the seller related had purchased them for $253 million. We do expect to see a lot more of these kinds of opportunities and trades, as the majority of the housing stock in the Bronx is rent stabilized. They typically do not have free market units, and thus they are struggling in comparison to assets that have free market apartments, where they can compensate for the rise of expenses and rise of debt without currently having a path to raising revenue to cover these costs.
Thank you, Daniel. And I want to add that we know that there are three types of multifamily in New York City in general. They're free market, rent stabilized, and affordable housing. We also know that in the Bronx specifically, the rent stabilized market got hit several times through HSTPA, the Housing Stability and Tenant Protection Act of 2019, through interest rates, through increased expenses throughout the years. And what Daniel's describing is the fact that there are buyers out there that are attracted to the lower valuations of rent stabilized multifamily. One of the things we're seeing, and it's important to mention here, are two types of sellers. Sellers that have maturities, mortgage maturities coming up, and in some cases involved with the banks or not involved with their banks, that need to sell. And these are somewhat forced sellers. But the second group are strategic sellers. And Daniel, Jason, Victor, Sozio, myself, and many others in the company have some older buildings, families that own them for a long, long time, and made a strategic decision to sell because they don't want to be in that business anymore. In many cases, these buildings have a lot of equity and so on. Affordable housing has done well in the Bronx as well, or we've seen at least one or two transactions there. And that is a little bit more of a nuanced asset class, where we do have mission-driven investors that also require private-public partnerships. So they'll go to the city, they'll go to the state, and sometimes to the federal government to make sure they can provide affordable housing that is quality affordable housing, as well as make ends meet and make an economic sense of the deals. So we're seeing that continuing in the Bronx. And the housing policy, which leads me to development, and the City of Yes have affected development in the Bronx as well in the past 6 months. Jason, why don't we talk to it a little bit?
Yes, thank you, Shimon. The development market, we're seeing consistent interest and activity across all development asset classes. You're seeing a dollar volume of 50% year over year to about $290 million. The transaction volume dipped a little bit, about 10%, and that correlates to larger development sites being built, right? You're seeing properties that normally people were looking at the 45X and getting comfortable with the 45X are now getting comfortable with the new City of Yes initiative, the UAP, and are underwriting to the UAP, which is able to increase the price per buildable square foot. We're seeing the average price per buildable across the Bronx, about $100 a buildable square foot, which is consistent with the past couple of years. But we're seeing larger transactions. So when people are looking at development sites, they're looking at sites with a larger footprint to build multiple 99 unit buildings on the site, or even 3 at a time, instead of buying a single site to build one 99 unit building. We're marketing a property in the South Bronx in Mott Haven, which is currently in contract. And we saw a tremendous amount of uptick in offers and activity. We're seeing close to 30 offers on the property. There was a competitive bidding war, and we're seeing firsthand how developers are underwriting these deals compared to the 45X and utilizing the City of Yes in today's current market and making sure that their numbers are penciling out and making sure they're seeing the return that they're looking for.
So, Jason, you'd say the housing policy and the City of Yes was a good combination to revive or start the supply of housing or building housing. I know it's not perfect. I know we're looking for some more incentives on above 99 units. For now, it looks like things are moving nicely because of that. Is that correct?
100%. I think as developers get more comfortable and understand the program a little bit more with the City of Yes and the 45X, they're looking to place capital and start developing.
So the interesting part, just to build on what you're saying, Jason, is that the housing policy on the one hand and the City of Yes on the other hand, specifically as relates to the Bronx, has affected growth in the dollar volume of transactions for development sites in the Bronx. And we expect that trend to continue, and specifically with the additional A rights for affordability. So that's fantastic. That's great to hear. And it means that the Bronx is moving from a transaction perspective in the right direction when it comes to these two asset classes. Well, Daniel and Jason, I want to thank you both, and we expect the Bronx to continue to do well for the next 6 months.
I agree. Thank you very much, Shimon.
Thank you. Thank you, Shimon.